A small industry of sorts seems to have popped up which is thriving on layoffs now. Such is the scale of people being fired from startups. There are startups which are now helping companies in smooth layoffs, making it less painful for the employees. So why did things come to such a pass? Skeptics have for long been questioning the deep discounting, high cash burn, and growth at all costs model of Indian startups. But there was no stopping for them. Now, the recent funding slowdown and market scrutiny appears to have enforced some discipline among them. On the 1st of August, Zomato reported a consolidated loss of 186 crore rupees for the quarter ended June. Thus, the online food delivery platform's losses have narrowed 48% from the previous quarter's figure of about 360 crore rupees. And how did Zomato achieve this? CEO Dipinder Goyal said that over the past few months, Zomato's focus on profitability has sharpened amid the change in market context, and it is allocating resources with a long-term view on sustainable growth and profits. The goal comes along with sweeping changes. Having internally rebranded itself as Eternal, Zomato plans to move to a structure where it would have multiple CEOs running each of its businesses, which are Zomato, Blinkit, Hyperpure, and Feeding India. While key details are still missing, this appears to be an attempt to set up a corporate umbrella structure where the parent company is able to diversify revenue streams and derive larger profits from multiple subsidiaries. After the COVID-19 pandemic struck, Swiggy downsized its cloud kitchens and laid off 900 employees, citing its focus on growth and profitability. This year, Swiggy is introducing new private labels in the food business segment. While it is launching new cloud kitchens for these brands, it is also rationalizing costs and seeking optimization. In fact, Swiggy is reportedly being very cost conscious with this exercise. In December last year, Swiggy co-founder and CEO Sriharsha Majeti said that the first COVID lockdown forced the company to make hard choices, which accelerated it along the path to profitability. In fact, he said that Swiggy's contribution margin was healthier than pre-COVID levels. He added that the food delivery category would turn profitable in the next 2 to 3 years. In July, 197 Communications, the parent company of Paytm, presented the annual report for FY22 for the first time as a public listed company. It said that the company's aim was to achieve operating profitability by the second quarter of FY23. At that time, Vijay Shekhar Sharma, the founder and CEO of Paytm, had said that there had been rapid growth in payments and a significant scale-up in the lending and payment devices businesses. Clearly, these three large startups, along with select other names, have at the very least reoriented their priorities towards profitability. But what are the drivers of this transition and the challenges involved?
I think most of these startups, have kind of realized that they will not get a multiple just by pure cash burn. And these are businesses, which is not come, 1 year, 2 year horizon. Of course, the pandemic led to acceleration in a lot of digital trends, which kind of supported them. And that's the reason, they've taken this entire call around profitability now, because valuation multiples are kind of converging in the internet space. The more you delay the profitability path. So I think, yeah, have taken a conscious step in terms of profitability. So some would have taken the form of reduction in headcount, some would have taken the form of reduction in marketing expenses, and I think it makes all the more sense because now these businesses are largely 5 to 7 years in terms of time frame from where it started. But it is not going to be easy to sustain the profit and the growth because if you clearly look at what they were doing all these years is that they were compromising on the profit to achieve that 25-30% kind of growth rate. So now, with this entire focus coming in, they might even achieve profitability like, Zomato, they did a break even in the food business, which is a very good sign, which is there. But we'll have to wait and watch whether or not this impacts growth rates, whether you call it fintech, whether you call it quick commerce. I think there it's not going to be easy to sustain the growth because those markets are fragmented. There are multiple players chasing that high growth which is there. So I think this path to profitability, whether or not someone wants to do it or is able to do it, really depends in terms of the market structure, which is a major thing here. You will see things changing when people are being asked to pay for delivery, unit economics turn favorable, because you really cannot have this scenario for more than 3 to 5 years where the company is just burning losses, company is paying for delivery, company is kind of giving discounting. End of the day, the customer has to pay, and India as a market is price sensitive. There's no doubt about it. So when it comes to the customer paying for delivery or for the customer paying the full charge or the full price of the product, there is going to be some impact in terms of the consumption patterns of the customer.
According to Karan Taurani, dominant startups in highly consolidated industry segments like food tech and e-commerce are best placed for pursuing profitability without significantly sacrificing growth. Finally, there is increasing regulatory scrutiny of internet companies, which is both a motivating factor for startups to pursue profitability with renewed vigor and a hurdle that will have to be overcome during their journey.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
सब अच्छी दिख रही हैं यार, कौन सी खरीदूं? ये तो वही बात हुई, 4000 शेयर्स लिस्टेड है, कौन सा लूं? वो तो सबसे आसान है। तुझे 5 पैसा नहीं पता?
अब तो सबको पता है। 5 पैसा पर है 4000 स्टॉक्स की रिसर्च, टेक्निकल टूल्स और इन्वेस्टमेंट आइडियाज। डाउनलोड 5 पैसा नाउ।
अब तो सबको पता है, investing made easy and rewarding with 5 paisa. Investments in securities market are subject to market risks. Read all the related documents carefully before investing.